It's been roughly a week since the crypto market began tanking. It took just days for the crypto exchange FTX to go from a $32 billion business to bankruptcy. Its founder, Sam Bankman-Fried, went from industry captain to black sheep and lost his multi-billion-dollar fortune. Darian Woods joins me now. He's co-host of NPR's The Indicator from Planet Money, and before that, he was an advisor to New Zealand's Secretary of the Treasury. Darian, thank you so much for being with us. Can you just tell me roughly what happened to FTX?
So FTX can be understood by thinking of its company itself, which is an exchange. So kind of just like a stock market exchange. You buy, you sell, and the exchange takes a cut. Yeah. It had a sister company called Alameda Research. Right. And Alameda Research was kind of on the riskier side of things. It would borrow, it would speculate, it would arbitrage, and this should have been kept separate. It said that it was keeping these separate, but as we've found out in the last couple of weeks, these were not. So FTX was lending money for those speculative bets, including from clients' funds, that it's been reported.
So if I get this right, FTX sets up the market, it sets the rules of the game, it offers opportunities for people to participate in the market, and then it stays out of it.
Correct.
But then it had this side, Alameda, which was participating in the market that it was creating.
That's right. And there was a coin called FTT, and that made up 40% of Alameda's assets, it's been reported. And so this is a little bit like a snake eating its tail. It's not going to create wealth out of nothing. And so as creative as the books might have seemed over the last several months, since rumors started swirling, including by the rival of the founder of FTX, investors in crypto just lost confidence over the last couple of weeks. And from last Sunday through to the Friday when there was declared bankruptcy, billions and billions of dollars were withdrawn, and it was analogous to a bank run.
Yeah. I mean, because so much of finance relies on confidence.
Exactly.
And once that goes, then everybody flees.
And even more so in crypto.
So our Nancy Cordes asked the Treasury Secretary Janet Yellen about FTX and what's happening in crypto. Let's listen to what the Treasury Secretary said.
Investors and consumers should really be very careful. We have very strong investor and consumer protection laws for most of our financial markets, but in some ways the crypto space has inadequate regulation.
Inadequate regulation. So what happens to those people who, or does that, what happens to people who had money in FTX? I mean, I feel like would have been regulations in place on a regular market that people are out of luck because those regulations didn't exist.
So there are certain regulations around what somebody who's got their money in a bank, what that bank can and cannot do. You're right that some of those regulations don't exist. However, FTX did state that its users' funds were not being lent out. So deceiving people about what their funds were being used for is illegal, even in the crypto world. It's not true that crypto is not regulated, and that brings us to kind of the investigations that are going on. But you're right, this is a murky space. It's a new frontier in the financial world, and how that plays out is unknown.
And what about contagion? What about craziness in the crypto world slopping over into what we might think of as the more traditional world?
So a lot of crypto analysts are fairly sanguine about this. There are, of course, varying views.
Weren't they sanguine about crypto in the first place?
So there are varying views on this, and we will see how it plays out. But here's a statistic. The total market capitalization of cryptocurrencies is $1 trillion, roughly, more or less.
Yeah.
And that is half the value of Apple as a company. Okay. So it is not big as a wider scale. We also haven't seen banks, we haven't seen corporations and people using crypto as collateral in a way that could see cascading effects. Now, it's hard to make predictions about the future, but there are some certain reasons why this may not spill out to the wider financial world.
All right. Darian Woods, thank you for helping us understand this corner of it. We appreciate it.
My pleasure.
Thank you.